Meta is currently up over 5% in after-hours trading at the time of recording this video, after the company announced its second quarter 2024 earnings results. Meta has also been one of the most volatile stocks I have ever seen over the past few years. It fell over 70% from 2021 to 2022, and at this time, people thought the company was dead. But since the bottom in late 2022, the stock is now up over 400% and has produced massive returns for its shareholders. People seem to be back in love with the stock, and Mark Zuckerberg has continued to prove his haters wrong. So in today's video, I want to go through Meta's earnings results, show you the highlights, and discuss whether the stock is looking cheap or expensive after earnings today. Before we get into the video though, I just want to say that I work extremely hard to get these earnings videos out as soon as possible. So if you enjoy or appreciate these videos, then please remember to leave a like on it, as it does really help out my channel. Now with that being said, let's hop into Meta's earnings. Alright, now as always, I went through the earnings report and I took some screenshots of all of the key highlights that I think investors need to know about. So starting from the top, Mark Zuckerberg said, "We had a strong quarter and Meta AI is on track to be the most used AI assistant in the world by the end of the year." So Meta AI is on track to be the most used AI system. That is just crazy. Revenue also came in at $39 billion, which is up 22% year over year. Income from operations was $14.8 billion, up 58% year over year. The operating margin also expanded to 38%, which is up 9% year over year. And lastly, net income came in at $13.5 billion, which is up 73% year over year. So this was a very strong quarter for Meta. Again, revenue was up 22%, operating income up 58%, and net income up 73% year over year. So Meta is absolutely killing it. Second quarter 2024 operational data is down here. Family daily active people increased by 7% year over year. Ad impressions increased by 10% year over year. Average price per ad increased by 10% year over year, which overall led to the revenue growing by 22% year over year. So basically, there are more ads being shown on Meta's family of apps, and the price for these ads on a per ad basis also increased by 10% year over year. So there are multiple tailwinds right here that are adding to Meta's overall business. Lastly, down here, we can see that Meta's cash and cash equivalents is now sitting at $58 billion, so the company is still very cash rich. Now moving on to the next screenshot right here, this is simply just the income statement, but what I wanted to point out is that Meta's diluted shares outstanding basically did not decline year over year. So Meta's share count is basically flat on a 1-year basis, which I do think is interesting because this company is buying back a lot of shares. So it seems like they issued some new options or something like that over the past year. All right, moving on to the balance sheet now. We already saw that the company does have $58 billion in cash and cash equivalents. They also have $76.4 billion in total current assets. Now, compared to the total current liabilities of $27 billion, this is a very strong balance sheet because Meta has more cash than current liabilities. Total liabilities are also sitting at only $73.5 billion, which means that Meta has more current assets than total liabilities. So Meta has a very clean balance sheet, and this is a very financially sound business. Now, moving on to the cash flow statement, here we can see that operating cash flow did grow by $2 billion year over year, from $17.3 billion last year to $19.3 billion this year for the second quarter. Year to date, Meta has produced $38.6 billion in operating cash flow, which is up $7 billion year over year. However, we can also see that the capital expenditures did grow by $2 billion to $8.1 billion this year versus $6.1 billion last year. Also, year to date, Meta has spent $14.6 billion on capex, which is up year over year. So Meta is producing more operating cash flow, but this is kind of being offset by increased capital expenditures, and the company basically did not see any free cash flow growth year over year for this quarter. Now, we can also see that Meta repurchased $6.3 billion worth of stock in the quarter and paid out a $1.3 billion dividend. Now, this is what is interesting because, again, Meta repurchased $6.3 billion of stock in the quarter and $21.3 billion of stock year to date, but the shares did not decline year over year. So it seems like there is something offsetting these stock buybacks right here. But anyways, this is how Meta is spending its free cash flow, is paying out a dividend and buying back shares. Now, what I also like about Meta is they give an earnings presentation every single quarter, and there's a lot of cool information within this presentation. One of those is the advertising revenues by user geography. And here we can see that the rest of the world increased the advertising revenues by 33% year over year. Asia Pacific saw a 19% increase to ad revenue year over year, Europe saw a 26% growth to ad revenue year over year, and the US and Canada saw 17% year over year growth to ad revenue. So every major market that Meta is in is seeing strong advertising revenue growth, with the rest of the world being the highest at 33% revenue growth year over year. Now, if we also take a look at Meta's segment results right here, we can see that Reality Labs produced $353 million in revenue in the quarter, which is up roughly 20% from the $276 million in revenue in the second quarter of last year. So the Reality Labs segment of the business is continuing to grow, but it is still a very small portion of Meta's overall business. It's like 1% of the overall revenue that the company generates. Now, if we take a look at the operating income from the family of apps, it was actually $19.3 billion, okay, which is significant. It's way up from the $13 billion last year. However, Reality Labs' operating loss came in at $4.5 billion, which did grow from $3.7 billion of losses last year. So Reality Labs is continuing to weigh down Meta's overall profitability and operating income. Like without Reality Labs, Meta would be absolutely crushing it in terms of operating income. So this is something to definitely keep an eye on, especially as, Reality Labs has only done $353 million in revenue, but $4.5 billion in negative operating income. So definitely something to watch out for. Overall, Meta's operating income did come in at $14.85 billion with that 38% operating margin, which is very good. Now, if we take a look at the expenses Meta has as a percentage of revenue, we can see that for the past 4 quarters now, they have pretty much stabilized. They've actually grown slightly over the past couple of quarters, but in general, the expenses for Meta as a percentage of revenue is way down from in 2022, when basically the market was saying that Meta's business was dead and Meta was spending a ridiculous amount of money. Meta has seemed like they got their spending under control now, and the company is back to growing profitability and expanding margins. Next, we have the family daily active people, and we can see that there is now 3.27 billion daily active people on Meta's family of apps, and it is continuing to grow, and it grew by about 7% year over year and by about 30 million people quarter over quarter. So there are more and more people going on Meta's family of apps pretty much every single day, it seems like. Now, in terms of the family average revenue per person, it did come in at $11.89 for the quarter, which is up 14% year over year. So the amount of revenue that Meta is generating per person on its family of apps did grow by 14% year over year. Next, we have the ad impressions delivered year over year as a percentage change. And we can actually see that the ad impressions year over year growth rates have come down for basically every single market. In fact, yes, it was in every single market. The number of ads people are seeing is still growing quite well in every single market, but again, the trend is clearly going down. And if the trend does continue to go down, then this could be a loss of a tailwind behind Meta's business. Because remember, the revenue grew by 22% year over year, and it was led by ad impressions growing year over year and the price per ad growing year over year. So if the ad impressions are not growing year over year, then Meta's revenue growth will come from the price of ads going up. So again, if this trend does continue and the loss of ad impressions growth does stop year over year, then that will be one less tailwind that Meta has behind its business. So it's something to watch out for. The average price per ad on a year over year basis is growing quite strong across the world. In Europe, it grew 18% year over year, and in the rest of the world, it grew 24% year over year. In Asia Pacific was 4%, worldwide was 10%, and in the US and Canada, it was 9%. So Europe is seeing strong advertising revenue growth, and the rest of the world is also seeing strong advertising revenue growth. Now, in terms of free cash flow, Meta produced $10.9 billion in free cash flow in the most recent quarter, and in the second quarter of 2023, they also produced about $10.9 billion of free cash flow. So this is what I said earlier. The company basically did not see its free cash flow grow year over year, and this was due to the company spending more on capital expenditures in this quarter. In the trailing 12 months, Meta has also done roughly $48.5 billion in free cash flow now. Meta's CFO also gave us the outlook for the third quarter of 2024, and they said that we expect the third quarter 2024 total revenue to be in the range of $38.5 to $41 billion. They also gave us some guidance for 2025, and they said, we expect infrastructure costs will be a significant driver of expense growth next year. We anticipate our full year 2024 capital expenditures to be in the range of $37 to $40 billion. We currently expect significant capital expenditures growth in 2025 as we invest to support our artificial intelligence research and product development efforts. So it sounds like Meta is expecting their capital expenditures and their overall expenses to actually grow again in 2025. So it seems like 2022 was a year of high expenses for Meta. 2023 was their year of efficiency, and then 2024 was kind of them leveling out the business. And now the CFO is saying that in 2025, they are expecting the expenses to grow significantly once again. Therefore, I actually think that the best metric to use for Meta's business right now is operating cash flow, because the company is going through a massive capex cycle, which is significantly lowering free cash flow. And in the trailing 12 months, Meta has done about $78.4 billion in operating cash flows now. So if we head back over to stock unlock really quickly, we can see that the business was valued at $1.17 trillion before the market close, but the stock is up 5% in after hours trading. So in after hours trading, Meta is now selling for a market cap of $1.228 trillion. Now, again, the company did produce $78.4 billion in trailing 12 months operating cash flow, which means that it is selling for 15.7 times operating cash flow today if we do want to round up. Now, if we go and take a look at Meta's historical price to operating cash flow over the past decade, we can see that its average has been about 20. So the company is actually selling below its 10-year average price to operating cash flow today. However, I do think that Meta stock was trading for a premium back here in the 2015 range. So let's zoom into 2019 to see how the stock has been valued over the past 5 years. And over the past 5 years, Meta's average price to operating cash flow has been about 15.1. So relative to its 5-year averages, it is selling slightly above its averages. However, the stock also was selling for only a price to operating cash flow of 4 in November of 2022. So I do think that these numbers are actually being skewed to the downside as well. So it is kind of hard to know what the fair value is for Meta based on historical averages right now, because it was significantly undervalued in 2022, and then it could be arguable that it was overvalued in 2024. But it seems like a price to operating cash flow between 15 and 20 is somewhere in the fair value range for Meta, at least relative to how the market has historically valued this business. And overall, it does not seem like the stock is extremely expensive relative to how the market has historically valued the business as well. Now, to finish up this video, I want to do a quick discounted cash flow calculation on Meta stock. And here we are going to be projecting out the operating cash flow over the next 5 years. And here I am saying that the operating cash flow will continue to grow at about 10% annually, and the company will continue to buy back roughly 1.76% of its shares on an annual basis, which is its 5-year average currently. Lastly, I am also saying that the company will trade for a price to operating cash flow of 15. And if Meta can hit all of these metrics, then its share price will compound at an annual rate of 11.77%, which is a market-beating return and a return over the S&P 500's historical average of 10%. So basically, if Meta can continue to grow its operating cash flows at 10% annually over the next 5 years, and at least maintain a price to operating cash flow of 15, then the stock does look like it could be undervalued today and produce a market-beating return. Now, if we scroll down, this means that Meta would have to produce $126 billion in operating cash flow by the first quarter of 2029. Again, the company is currently producing about $78.4 billion in operating cash flow. So Meta would have to grow its overall operating cash flow by roughly $50 billion over the next 5 years to produce that market-beating return. Now, personally, I am not that confident in Meta's business. This is one of the reasons why I sold the stock already. I did sell it for an over 100% return. But the reason that I sold the stock is simply because I don't know enough about Meta's business or its moat, or really the future projections and how to accurately guess the future projections of this business. Meta has absolutely blown me out of the water by continuing to grow its revenue at over 20% annually, because there was a period there where Meta was only growing its revenue by 3% year over year. So this company has blown my own expectations out of the water, and I do believe that I don't deserve to still be in the stock today because my own expectations on its future growth were way below what the company's actual results were. And ultimately, I did still make good money on Meta's stock. And even looking at the stock today, I just don't know for certain if the company can continue to grow its operating cash flows by 10% annually. So at its current price, it is not a buy for me. But you got to ask yourself that question on if you think that Meta can actually hit these metrics that are currently on the screen. And if so, then the stock could continue to deliver a market-beating return going forward. But that is kind of what is priced into the stock today. But overall, I do think that this was another slam dunk quarter for Meta. And also, investors should know that in 2025, Meta does look like it is going to go through another large capex cycle, an expense cycle, So maybe margins will be compressed next year, and overall free cash flow may be compressed next year as well. So that is something that investors should note from this earnings report. But with all that being said, that is going to wrap up the video for today, everyone. And if you did enjoy this video, then again, please remember to leave a like on it, as it does really help out my channel, and I do appreciate it. Also, if you're new here and you want to stick around and see more stock market updates like this and stock analysis updates like this as earnings reports come out, then make sure to subscribe to my channel as well, because that would be pretty awesome. But with all that being said, thank you all so much for tuning in. As always, I truly do appreciate it, and I really hope to see you all again in my next one, which should be my Amazon earnings analysis video tomorrow.